Good afternoon, everybody. Uneducated Economist here. So I was reading some articles coming out of Bloomberg, some pretty good articles. One of them was with Jeffrey Gundlach talking about the high probability of default coming from these high-yielding debts, like these corporate bonds. And one of the quotes inside of this article I thought was pretty good, and I wish I could remember it word for word, but it was something of the effect of like when you have a recession, when we have a downturn this severe, a single shot from the Treasury is not going to fix it. And I think that's where a lot of people are misjudging the economy right now. They feel that the worst has happened, and right now we're in a recovery. It's more the question of like how long is this recovery going to take, and that is like I think probably going to end up being a very big mistake for a lot of people because I feel that the downturn has yet to really come. I think that we are going to experience a bigger downturn. The only problem with it is that the way the Federal Reserve is handling this, nobody really sees it. And that's why Jeffrey Gundlach is talking about the probability of these bonds defaulting on these high yields because these guys are not credit worthy, right? They should never have existed if it wasn't for the fact that interest rates are as low as they are, and they have a investment class out there that is demanding and seeking higher yield. They are willing to take on ever increasing amounts of risk because they have the Federal Reserve backing it up. Okay, so a zombie corporation is basically a corporation that couldn't exist if it wasn't for the fact that they were able to acquire ever increasing amounts of debt. If they don't acquire the debt, then they're not going to be able to exist. It's not a profitable company. It's just that people are willing to loan the money. Okay? Now, this can only last for so long. If that company does eventually become profitable and able to pay off their debts, well, that's one thing. But if you have to ever increasingly take out ever more amount of debt in order to survive, eventually you collapse. Now, I'm not going to get too much into the different economic theories out there, but Austrian School of Economics says that when you come into a situation where the business cycle has reached its peak and it's turning over, the companies that should never have made it, right? They were not a viable company. The investment that went into those companies was malinvestment. Okay, so you cannot get a return. It wasn't profitable. It was managed wrong. Whatever it is, they need to go down, right? They need to get out of the scene and let entrepreneurship take its course and move in and provide the better, faster, more productive service, okay, for cheaper and be profitable at it. And that's like the undergrowth burning off. And when you do that, it gives room for more plants to grow. It gives you more room for the green shoots, like they like to talk about inside of economics. But if you do not burn if you do not let those companies fail, then they suck resources. Okay? They suck the best employment. They suck the profitability from a viable entrepreneur who cannot compete because he is competing against somebody who is getting loans to stay in business. Okay? So that's a situation that we have run into right now because the Federal Reserve is buying up corporate debt. They're even buying up high-yielding corporate debt. And it's not so much that they are providing the loans to do it, right? That there's this fact that it's happening. Okay? What's happening is that investors want to front run that. They want to be there before the Federal Reserve buys these things so that when the Fed does step in, they'll be able to sell them to the Fed for a profit. That's the whole goal of setting up these lending facilities, was to give people that confidence, to give people the reason to believe that if they make this investment, this purchase, that the Fed will be there to back it up. And so long as they have that, then they can continue to expand into the debt creation like they have always done. The moment that these companies start to fail and everything starts to collapse in on itself and these debts need to be written off, then the expansion of credit no longer exists it starts to contract. This is where you have the deflation. This is where you have economic collapse. This is where you have high unemployment. This is where everything starts to unwind and undo itself. Everything that the Fed has kind of built, this big ball of wax. So right now you look at some of these lending facilities. Some of them were really, really popular and got used up. Like they had hundreds of billions of dollars dedicated to these particular lending facilities. And some of them got used up, like the PPP program, right? The payroll protection program. Other lending facilities hardly have been touched. In fact, the Fed has had to modify these things to try and get these lending facilities to be touched. They set up what's called a Mainstreer Lending Facility, and this was going to provide loans to small businesses. And these loans to small businesses are going to keep people employed. That's the whole point of it. It was the whole point of the payroll protection program. Can you imagine how high unemployment would have been had it not been for that payroll protection program? It was a proxy for unemployment. All these people were not counted on the unemployment line as unemployed. These people had jobs. They maintained jobs, but they were not employed. So who knows what the real unemployment number would have been? Who knows? It would have been much higher than it showed. But that papering over of the problem, right? They call it bridging over, but it's not. It's papering over. It's not bridging over the recession. It's like just covering it up. So this Mainstreet Lending Facility, they had to drop like the amount that you could borrow. Like I think there was a minimum of like $1 million, and it was like there's nobody as far as a small business goes. I mean, maybe some mid-sized businesses would want to borrow $1 million, but no small business wants to borrow $1 million. I mean, maybe somebody does out there, but I mean, you borrow $1 million, you have to pay $1 million back. If you could borrow $1 million and make that $1 million be productive, that's one thing. But if you're borrowing $1 million so you can survive, no way. I mean, even a business owner is going to say, I'm not going to do that. You know, I mean, that doesn't make any sense. But if you could borrow that, kind of money, then, expand, buy new equipment, whatever. I mean, then you got something that's reasonable. If you feel that, borrowing this money is going to be profitable in the end. But borrowing it to survive, that's just creating zombie small businesses. And I think the difference is that when you got a small business, you have an individual who is smarter than that. But when you have corporations, you don't really have like an individual making a decision on things. And so that small business owner knows better. They're not going to borrow $1 million so they can survive. They're not going to borrow $500 so they can survive. Right? I mean, they might borrow $500, but you know what I'm saying. They're like, once they know their business is done, it's done. They gotta throw in the towel. And this Mainstreet Lending Facility has $600 billion dedicated to it, and they've lent out like $1.2 billion. Nobody's borrowing money from it. They had to lower the minimum amount. They went from like $1 million down to like $250,000. And still, nobody's borrowing the money. The small businesses, if we get hit again, the amount of small businesses that will fail is going to be huge. They have already suffered an extreme amount that's going to take them years to recover from. And to think that, if we have any kind of downturn again right now, and they have to suffer through some sort of lockdown type scenario, I mean, you can kiss a lot of these companies goodbye, especially considering that they have taken this opportunity to try and hope for the best and started remodeling their places to try and accommodate for the social distancing and all the other stuff that comes along with it. When they say that, we're going to go back to normal, there is no going back to normal. Once these businesses and everybody else has set this up for social distancing, that's the way it's going to be. Whether they want it or not. I mean, some people might, go back, but there is no going back. It's no going back. I mean, the masks may come off at some point, but as far as like the way people are conducting and doing business right now, that's forever changing. And it's happening right now. So, and I hear it. I hear people say it all the time. When we go back to normal, it's just like, gosh, dude, there is no back to normal. That's it. Normal's gone. There is no more normal. It's all new. This is the normal. Strange new world, weird times. Anyway, sorry to go off there a little bit on the end. Anyway, yeah, I'll leave links down in the description for you guys. Uneducated Economist. You let me know.